the Aveng Group, where South Africa's largest infrastructure development company posted a 34% decline in headline earnings for the 6 months through to the end of December 2011. We get more on those numbers now, joined by Roger Jardine, Group CEO of Aveng. Thanks so much, Roger, for joining us today. Nice to see you again. While revenue up 13.4%, HEPS down 49.2%. Nothing new coming to the fore here when it comes to a South African construction firm.
Yes, thank you very much. I think what you're seeing again is the softness in South African infrastructure. Our order book, in fact, climbed 24% to 46 billion rand, but 31 billion of that coming from Australasia. So definitely all still quiet in South Africa.
Absolutely. I mean, if we drill down into things, I mean, even where you talk of this 2-year order book growth up 49.2% locally, that's contracted 24%. So that giving you a sense of even the outlook ahead and just how subdued a market we're looking at right here within South Africa's borders.
Very, very subdued. I mean, the diversification of the Aveng Group has come through for us once again. You're seeing this in terms of almost having that hedge outside of the country. You know, we're a global company. We're in about 30 countries. But of course, we'd love to apply our balance sheet domestically. We have applied it in PPPs in Australia, for example. So we're positioned for when the infrastructure rollout happens. We've seen a lot of policy pronouncements. I think there's increasing political will. We now need to move to the stage of implementation.
Where are your confidence levels sitting right now? Because, of course, this promise of infrastructure investment has been one that's been put on the table for a long while, and the challenge has been actually seeing that roll out.
Yeah, look, I think the last 3 years we've had similar pronouncements. And in fact, according to the National Planning Commission, infrastructure spend since 2008 has in fact declined. In this medium-term expenditure framework, it's up 4%. The disjuncture seems to be between really solid policy and then implementation. In SAFSEC, has shown 30 to 35% of tenders not coming out last year and not being delivered. So policy is one thing, and it's robust and it's sound and it needs to be supported by all South Africans. The time has come for the industry and for government to get together to make sure that delivery happens, and that I think really is where the inflection point is.
Okay, so it's an inflection point that we're waiting for. While we do, for now, a lot of that attention, as you highlighted earlier, focused on Australia and the Pacific Rim. But even in Australia, if you're looking at the construction side of things, the business on that end was hit by contract execution problems, right?
Yes, indeed. In fact, when we reported at year end, we mentioned projects such as QCLNG, that's in the Queensland area, where our McConnell Dowell business is very strongly positioned for coal seam gas developments. In Western Australia, we're very well positioned for iron ore developments there, where we're the #1 constructor of iron ore export berths. Those problematic contracts, there were 3 that we were grappling with. 2 we're feeling reasonably comfortable with now. The 3rd one is in a very early stage, only about 30–35% complete. We've made adequate provisions, and we're working to make up the backlog there. We were affected by things like rain, which had an effect on access, for example. You know, in this business, risky projects are part of the business. The issue is to maintain them and to make sure they don't impact on your profitability. You know, the underlying profitability of this business in Australia is 4 to 5%. We've come in with an operating margin of 1.7%, largely due to problem contracts, and we need to get those out of the system, and we are.
One of the ways to mitigate against that, of course, you highlighted geographic diversification at the top of the interview, but also in terms of the markets you're catering to, because where you have that construction and engineering segment within Australia coming under some pressure, it's global demand for commodities and energy that's driving growth in the mining and energy-related sectors specifically.
Yes, and in fact, as part of our strategy, for example, to take out to the rest of the world our core competence, we are one of 4 players globally that can sink deep shafts. And in the last few days, we signed a letter of intent with Codelco in Chile, where we'll be sinking a 1,000-meter deep shaft there. That's an entry into a very vibrant mining economy, and you know, similar initiatives will keep us very vibrant globally over the medium to long term.
The question that immediately springs to mind is why this is not translating for South Africa, because it's got to say something about the level of investment in mining locally.
Well, I think, look, we're at the tail end of the value chain. We provide services to the mining industry in open cut mining, in deep shafts, and decline development, etc. And our philosophy as Aveng, as a service provider, is very simple. We fish where the fish are. You know, I think the holders of mining rights will decide where to develop mines, and we will be right there to assist with that development, as we do in 9 African countries, as we do in Southeast Asia.
Is it getting easier to do business in those 9 different African markets?
You know, one of the things that we pride ourselves on is being able to execute mine development projects in remote areas. That's our competitive advantage. So you will find, for example, Aveng Moolmans operating in very remote areas, and we go where big mining houses can basically partner with us to develop these contracts.
And those are the partnerships you're after more so than partnerships with governments?
Well, ideally, we would like our order book to be 50% public sector, 50% private sector, which was the case a few years ago. Now we're at about 77% private sector, I'm talking globally. We'd like to see that balance shift back. That isn't through a grand design. That is simply through fishing where the fish are. And once infrastructure spend rolls out domestically, we'll be right here to participate.
Let's take a look at your outlook moving forward, because I mean, you talk about 77% of the work generated by foreign operations over the next 2 years. What's your outlook for the South African market? Because you know, a question that we're continually asking is whether we've hit the bottom of this construction trough right now.
Well, look, we have been sort of drifting downwards for the last couple of years post World Cup. I think to the extent that we see the rollout of the infrastructure plan, that will be the measure of whether we're at the bottom or not. Our view is for the next 18 months at least, you will continue to see the construction sector taking a lot of strain, because there is a lag time between when a project is awarded to when it starts showing up in your numbers. So for the next 18 months, we're quite subdued in terms of our expectations, in terms of operating environment.